Hey guys, what's going on? In this video, we're going to talk about something incredibly important, and that is the behavioral characteristics of the market. So sometimes here at 13 Market Moves, we look at many divergences, we look at many chart patterns, but at times we're really focused on looking at behavioral patterns. It's the behavioral patterns or the shift in those patterns is what often communicates to you exactly where overall the market is headed, not what the market is going to do every second, every 5 minutes, but overall where's the market headed. And understanding these behavioral characteristics is extremely important when you're really trying to evolve into a better trader. So I'm going to share just a few things that we're noticing over the course of the last few days, the shift that the market is actually going through. So clearly this is a chart of USD, DXY, and we've been talking about the top in DXY, which when I'm talking about the top in DXY, guys, in many videos I've explained to you that the top in DXY equates to gold prices higher, it equates to commodity prices higher, and overall equates to market naturally going higher. So they have a negative correlation. So just understanding this basic fact would have helped you nail some easy trades. So this is a 5-minute chart. If we're to extend it, you're probably sitting there wondering, well, where's the top, Leo? Show me what top are you talking about? So when you look at a slightly longer time frame, okay, so here's the longer time frame. Now we're looking at 20 days, and clearly you can see top one, top two. But if you really wanted to, and you should be doing a lot of this, you should be going looking at longer time frames. You should be looking at various time frames. Should be going taking a look here what has happened, right? And so if you studied our crypto course, guys, crypto course, it gives a lot of examples how to trade crypto, but really that course is designed to help you understand the entries and the exits. And that's the course where I go thoroughly, like a whole hour of explaining this pattern right here, which is the tornado pattern. So you've got a situation where you got three tops, 1, 2, 3, okay? And the last top just undercuts the prior two tops, briefly, slightly, okay, within a certain amount of time. So we're looking at the time frame in relation to the top information, and the tornado pattern often spells out a sharp drop like this. So in this particular case, understanding, okay, this is the dollar, okay, you would go super long, buying a shitload of calls on gold. And by the way, guys, that was officially, when you take a look at gold, this was the best trade. I mean, these options, guys, on gold, look, this is, if you watch the videos, if you follow these videos thoroughly, trying to learn, guys, we entered this trade right here with actually, I've shown the alert in one of these videos not so long ago, where we've entered the gold trade right here at 1618. We collected some profits on this pump right here, okay, and recently we've been putting a bunch of, just the gold trade alone yesterday, guys, where the market basically was not doing shit. The gold trade yesterday made 7x. So if you're not putting those sort of trades together, guys, what the fuck are you doing trading the market? Schedule a call, talk to us. Don't miss on the 7x trades. Gold was a rockstar trade in relation to the sort of opportunity that we had in the market, because the market, again, wasn't doing a damn thing yesterday. But understanding these correlation, right? So it is important. This is how you're able to read into some market characteristics and behaviors. And just remember, what's going to appear to you in the next 10 days to look like a drop, all it is just going to be a pullback. It's going to look like a crash, and I'm going to explain in a second why. But just while we're on this chart, I want you to focus on this. So if we go a little lower time frame, 10 days, just to help you understand, okay, that it pumps and then the next day it looks like it's dropping, right? So when the market had such a severe downturn as we had this year, okay, you're conditioned in your mind, you're conditioned to short the bounces. And you know me, look, guys, for years I've been telling you to short the bounces, and that has made a ton of money. Right now we're buying the dips. And so what's going to look like a bounce that's going to reverse and collapse, all it is, just remember this word. If there's anything you're going to learn from this video, guys, remember the word a pause. The market is going to look like it's reversing and crashing, but all it's doing, it's a pause. as you can see, overall, we're in a highly, highly bullish pattern. I'm using this gold as an example. We're going to glance at S&P chart in just a sec. But understand, like, you're going to get this big pump, and then the next day it's going to look like, oh man, sure enough, we're dropping. And you're going to be very tempted to buy puts. Everything inside of you is going to be like, oh, I knew it. It's a dead cat bounce. And then what happens next is it looks like you get a confirmation, and then you get another fucking pump. And that's how a lot of short sellers get killed. So I don't want you to misread this market. So I think this is a really good example on gold. I think this is exactly what S&P 500 is going to be going through. And this is extremely important for you as a trader to understand that the market is not going to go higher every day. The market is going to pause on certain days. And yesterday, on November 14th, that's exactly what we had, guys. We had a pause, despite of what appears like, oh my God, we're going to the crash at the end of the day. So let's glance at the chart of S&P 500 to help you understand this a little bit more. So here's the S&P futures, okay? So we're going for this massive pump, okay, which we've nailed. This is how, guys, this is how some of our traders made close to $1 million. As a matter of fact, we had one girl that made, she went from like 8K to 250K. I think she's recording a video about her journey now, so you'll probably hear from her in just a little bit. But it's cool to know that, look, any color, any race, any nationality, you can come to 13 Market Moves and be successful. You can be a man, you can be a woman, you can be, it doesn't fucking matter who you are. You can come to 13 Market Moves and be successful. But I'm actually excited that a girl, a woman, a female has done that, because there's not that many great female traders out there. And so 8K to 250K, not bad. I don't think most of the guys that trade on their own can show those type of results. So don't miss the next video, guys. I think she should be working on it today, so we should be posting that video soon. So a girl takes 8K to 250K within 48 hours. You could have done it, okay? At this point, if you're a man and you're watching this, look, you ain't got no fucking excuses, okay? A girl is doing it, okay? Get off your ass, okay? Learn the fucking chart divergences. Okay, so back to the subject here. Looking at the S&P 500, you get this massive pump, right? And so yesterday, all right, we hit a high of 4,017. As pointed out in multiple videos I've been posting, I said, come Monday, what are you going to see? S&P is going to be over 4,000. So we got that. We didn't get that for a very long time. And briefly, we had this. We had this going into the close, and it looked like the whole world was falling apart again, right? The whole world is falling apart. It looks like we got 1, 2, 3. We got a multi-top formation on a shorter time frame chart. And so there you are. You're sitting there as a short seller, and you're watching at this. This is definitely the conditions that you want to short. And then you get a confirmation. You're like, fuck yeah, I was right. And you're getting this nice, by the way, this was a great opportunity, but we didn't take advantage of it, okay? We're focused on buying the dips right now. And oftentimes I get questions, well, why couldn't we just short it here, buy it back here? And oftentimes, guys, you're going to miss the big move. The big move overall was right here. So if we focused on shorting stuff here, getting back in, all of that, there are moments in the market where you should be doing that. And there are clear moments when you do it. But it's not worth to try to catch, let's say, 50-point move here to miss 200-point move here. It's not worth to catch this, 40-point move in order to be able to catch. The opportunity cost could be missing out on a huge move where the overall market direction is headed. So this downturn, when you're looking at it, especially on a smaller time frame chart, it looks like, holy shit, everything is falling apart. So let's take a look, right? Oh, fuck, that looked like everything was just collapsing there for a second. Let's go on a 1 minute chart. So when you're looking at this, you're like, oh, fuck, that's it. The bull run is over. I'm out. I'm done. Everything is fucking crashing. That's what you're sitting, looking at, and that's what you're thinking. With an exception that the most important part of this video is the behavioral characteristics of the market. So you have to measure throughout the day, the size of the move in relation to the time frame. So the predominant behavioral pattern when you're looking at this, okay, the majority part of the day, there's 390 minutes in the trading session, guys. What the market is doing since Friday, since the big move has happened, it's not doing a lot of things. So what really all this is from here to here, okay, so from Sunday night to Monday yesterday, and so far pre-market this morning, is you're really getting a pause. It's a pause. And for some of you that may be looking at this and looking like, well, this is certainly a crash, Leo. This is a crash. But focus on what the market is doing 90% of the time. 90% of the time, the market is just, it's not doing anything. It's going sideways. Look at the size of these moves, right? They're like plus minus 5 points, plus minus, 5, 10 points, 20 points max. And when the market is moving slow like this, guys, this is a characteristic of a bull. And when you're looking at this and you're like, well, Leo, but this shit looks like it's about to collapse. The question to ask is, okay, well, when we're dropping and people are unwinding, okay, a lot of times, understand the way the market functions, at times market has to drop in order to move higher. So this is one of these instances. And unless you're paying attention to like a lot of factors, like what we're looking at here, sometimes it's going to be very difficult to decipher that. And so working with a coach, trying to understand, okay, is it a real crash that's happening? Should I be converting into puts? Or is this just something that's temporary? I'm going to show you, just for the purpose of this video, just a quick way how you could like look at this and just get an idea what the fuck is going on. So go look at the longer time frame chart. So now I'm going to look at 15-minute chart. Okay, and so look at this. So this was Friday. All the pullbacks that we had Friday, look where they go. This area, 39.61, 39.60. Where did we drop yesterday on Monday? 39.64. So this is not a drop that you panic about, okay? This is a characteristic of the market. At times, market has to drop in order to go higher. So now, if we would have broken that on strong volume, it would have been a different story. And some of you were expecting the retail sales number this morning, and you're like, well, shit, sure. I mean, if the number is bad, the market is going to go lower. It's a bunch of bullshit, okay? The market has already voiced its opinion on what the fuck it wants to do. Understanding that now you are in a bull trend, and when the market is going to be doing this, oftentimes it's going to pause. Now, some of these pauses, they're going to look like the market is crashing, but that's not what's fucking going on, because you look, we're stopping just 2 points above Friday lows. When Friday we were in the move 7 and the market was collapsing, I'm sure a lot of you were jumping the fuck out of the trades and you didn't stay through the bigger part of the move, which by the end of the day, we were way, way higher. And that's how you could have maximized your gain. I mean, guys, Friday snow trade, 40x trade on snow. You're like, Leo, how the fuck do you get a 40x trade on a Friday? Well, easy. Look at this fucking chart. Okay, so in case you guys have never seen how a 40x trade looks like when you trade in weekly options on a Friday, this is how it looks. Okay, we caught this move. We bought snow calls right here when it was trading at 143. And we took all the way to 160, 162. That's where we're getting out of the trade. So this move right here, guys, that's a 40x trade. So, I mean, we're literally buying 152.5 strike, 155 strike, 157.5 strike. We're buying those things for pennies on the dollar when the market was dropping in the morning. So this is how you get a 40x trade on trading weekly options, guys. If you missed that trade, guys, there's going to be some phenomenal opportunities that are still coming up. So you know what to do. Fuck it. I've said it too many times. You know what to do. 13marketmoves.com. Schedule a call. Get back to our subject of the market behavior. But while we're on this chart, it's clear, right? So we pump, pause, pump, pause. The drop yesterday, we were buying snow calls again on Monday when it was doing what? When it was dropping. So 152, 153, that's where we're entering snow calls again, okay? But you could have easily said, well, look, the stock is up from 120 to 162. Leo, what the fuck are you doing buying calls here? Look at the behavioral pattern. Pump, pause, okay? And despite of all the negativity, we believe that behavior is going to continue. Now, it does not mean that we're going to make these sort of moves. Like, these are huge moves, right? For something to go from 120 to 148, no news, 143 to 163, no fucking news, right? That is not going to continue. But the behavioral pattern to where we could still get possibly a $5, $10 move on a couple of days here throughout the week on something like this, it's a no-brainer. I've told you in many videos that technology sector is way underpriced, okay? The negativity is still out there. Most of the people that are fucking bearish, okay, are not noticing that, hold on, if everybody's so fucking bearish, then why are these stocks growing like mushrooms? Why are they going $20 a day for 2 days in a row, and we're likely to get some further upside in these things? So understand that the behavior, the mechanism within the market has shifted. The sectors that everyone just been so highly bearish on, like the technology stocks, okay, that narrative is going to go away, because all of a sudden, a week from now, they're going to be looking at stocks like snow. It's going to be like at $180, and a week ago it was at 120, and people are going to be like, well, I guess we shouldn't be bearish on this technology sector anymore. Looks like technology sector is fucking outperforming. Well, they weren't telling you that shit last week. They're not even going to tell you about this shit this week. But when the shit is going to pump to the top, I promise you CNBC is going to be talking about it, okay? They're going to be talking about it, and that's going to be exactly the worst possible time to be buying calls, right? Why would you go fucking buy calls when these stocks double? See, CNBC didn't want to tell you to buy Apple at 135. They were still calling for a 20% drop. We said this is the fucking bottom in Apple. 135, we're in, we're fucking buying, okay? Apple's at 150. It didn't take very long, and it's a sizable move for Apple. Maybe not for some other stocks, but for Apple, this is a good size move. So how do you know, okay, that the market behavioral pattern has shifted from where it was? So, from shorting the bounces, how do you know that it's time to shift to buying the dip? Well, one of the easy giveaways you can look at is the VIX. I mean, guys, when the VIX is doing this, and this is just short term, right? I mean, the VIX is at 22. Every time it bounces, I mean, if there's any bounce you want to short at this point, it should be the bounce on the VIX. So when VIX is going, I posted a video not so long ago, right? I was saying basically VIX cannot break out above a key level. The chances of the crash are basically non-existent. You want to go bullish, bullish, bullish. I said that. Let's rewind 20 days ago when we were here, when VIX was above 30. I said, hey, you want to short the VIX. You want to go bullish on the market, short the VIX. This is sort of behavioral pattern, okay, that leads you to a shift in the market. I mean, this is a shift. And at this point that the shift has taken place to this magnitude, okay, you may say by looking at a longer time frame chart, let's bring that up here. Okay, so when we're looking at a longer time frame chart of S&P, look right here. I mean, it looks like, okay, we drop, we bounce, we short that bounce. We drop, we bounce, we short that bounce. We drop. Now we're going to bounce, and it looks like we're almost there where you should be shorting it. But don't forget, the market mechanism has shifted. So don't be shocked if we're actually going right here, 41.59. Don't be shocked if we're actually going right here, 4,300. Don't be shocked if we're actually going right here, 4,400. Leo, you lost your fucking mind. 4,400. You really think we're going 4,400? Why did you just say that we're going back to all-time highs? Guys, I wouldn't be shocked if we're going back to all-time highs. That's how stupid the fucking market is right now. I wouldn't be shocked. And I promise you, if we did get there, I would short the hell out of it, okay? Just don't misjudge the current market behavior on the drops, thinking that all of a sudden we're going to get another leg lower, that, we can get a pause. So yesterday's drop, slight drop after we hit a level of 4,017, right? This little red candle represents a pause. See, the move higher has started. This is a pause. Okay, let's go back to smaller time frame chart. This part right here is what you're seeing on the daily candle I just shown you. It's a pause. All right, overall, we are in a highly bullish behavioral pattern. Bullish behavioral pattern, oftentimes, guys, how can I describe it? You're going to be looking at your screen and it's going to look like, well, shit, nothing is moving. Nothing. It just looks like you're sitting there watching the paint dry. Look at this small moves, right? A few points high, a few points lower, a few points high, 5, 10 points higher. Like, look, there's no magnitude of the move. This is a characteristic that all the sellers are gone. Nobody fucking wants to sell. And when they do sell, okay, they only sell to the level from where most of the people begin to buy. Okay, that level coincides with the move 7 formation on Friday where everybody was getting out and we were buying the dip. Okay, so same level. So pay attention to the levels. Understand that we're not in a crash mode anymore. Okay, and chances are we're going to bust the fuck out higher today, hitting the level of 40.60. And I'm recording this, guys. What time is it? 6:22 a.m. 6:22 a.m. And so way before the report comes out, guys. You know, chances are the report is going to be bad. The retail sales numbers are going to be worse than expected, and that's actually going to give the market an opportunity to rally. For those of you that are new, you may be thinking why a bad retail number may cause the market to rally, because that would be the second data point for the Federal Reserve to say, okay, so first we had a CPI number that's dropping. Now we have retail sale numbers that are you know, they're just not looking good. Hold on, maybe it's time for us to slow the fuck down with these interest rates, with the hikes. And so the market could have a very bullish reaction if we get a bad report. I mean, that's just how the market functions. This is the behavioral characteristic of the market right now. Remember, small size moves, okay, what it really equates, okay, when the market is basically not going anywhere, when it's not doing anything, okay, what it really showing you is, like, look, when we're doing this and you sit there as a trader, you look at your screen, it looks like there are moments like, is the market even fucking moving? Are we closed for the day? Is it already 4 o'clock? Why is nothing moving? And so when you get in that sort of market behavior, the reason why this is happening, because all the sellers are gone. Nobody wants to fucking sell, because everybody that wanted to sell fucking sold in the last year. So, and oftentimes it's going to coincide with the VIX trying to go towards the 20 level, which I know, which you may be thinking, well, wouldn't that be a reason to go bullish here on the VIX and therefore bearish on the market? Well, I mean, the idea is good. Based on the chart, it makes sense to go bullish VIX and short the market right now. But based on the behavioral characteristics, you don't want to do that. Not yet. You don't want to do that. Any short-term movements in the market lower are going to be bought. Clearly, the market cannot be in the green every day. But remember, every day the market is red. What is it? It's a pause. It's not a crash. It's a pullback. It's a pause. And when you look at the key levels to decipher, should you be going short or should you be going long, you should be looking at the levels. And the levels are such, if we don't break below the 39.50 level, okay, everything is intact. And we wouldn't be shocked if we got a major move higher from here. Not like in a one shot, not to a point where we are making another 200-point move high in S&P over the course of a day, but it's going to be a gradual. It's going to be a very fucking boring market. You're going to be like, man, all this bullshit today. I've been looking at my screen and the market moved up higher 10 points, right? So this is where your selectivity, your methodology for selecting the right stocks to trade options on, that's where that's going to come in play if you still want to hit some of these 20, 30x type trades, because generally in trading S&P over the course of next, next few weeks, it's gonna be tough to nail some home runs there. So you have to go to individual stocks. You have to be able to find them if you want to make some home run trades. So with that said, I invite you to do so. Come here, trade with 13 market moves, study our methodology, because we will be showing you some of these killer trades. And instead of watching, I invite you to actually take action and participate in them. So to summarize real quick what I just said in this lengthy explanation. So the market's been going through this, okay, and made sense to short the bounces for quite some time. Now the behavioral characteristic has shifted. The market is doing this, okay, and so every time you're going to be tempted to short, actually oftentimes it's going to be matched with a level where your patience is running thin and you're going to be jumping out of your calls thinking that the market isn't reversing. And the reason why you want to do that is because recently the market has been doing a lot of that, and so you're still in your mind psychologically you're conditioned to be doing this, but you know, everywhere you look in the charts, we're already seeing the shift in behavior, okay? And with the VIX basically doing this, okay, and the market, instead of making, you know, big moves like this, the market's now, all it's doing is this, okay? This is bullish, okay? Less volatility is bullish. It allows institutional investors to come in and buy the market. And institutional investors, okay, they don't buy the market when it bounces, they buy the market in the dip. So when I'm saying that, at times the market has to drop in order for it to go higher, this is what that means. Institutional investors, they need a reason to buy. Like the programs that are buying stocks for them, they're not programmed to be buying the bounce, they're programmed to buy the dip. So when you're seeing this, let's go back to the S&P chart. So when you're seeing this, okay, this is where their computer is buying, okay? That's when they're buying, guys. And you wanna acknowledge that. You don't wanna panic when you're seeing this. You wanna understand, look, the market has shifted. We're going through this smaller size moves, okay? The banks are buying the dip because the volatility is much, much lower. They now have reasons. Any bad data point, the market gets a chance to rally. If we get some more bad data points, like I'm expecting with the CPI number, not CPI, with the retail number this morning. Okay, every bad data point we're gonna get gives the Fed the chance to come out and say, okay, we're done with this massive rate hiking process. And so any weakness in the Fed is the reason for the market to rally. So the more bad data we're going to get, the higher the market goes. It's confusing probably to some of you if you're new, but understand that these key behavioral characteristics, these big moves in the markets are done. We're going slow. Oftentimes, we're going sideways in the market overall in the index. While some sectors are going to explode, they are going to go higher. If you want to know what they are, guys, go to 13mm TV, take all the courses so you can understand this better. If you have any questions after I try to explain this, if you have still any questions about this, feel free to schedule a 20-minute coaching call, ask any questions you want. But more importantly, I just want you to be on the right side of the market. Instead of just looking at the charts, which is super important, I want you to start paying attention at such things as behavioral patterns. And in many charts, we're seeing the behavioral pattern has shifted. The behavioral pattern has shifted, the sellers are gone, and therefore it gives an insane opportunity for institutional investors to actually come in and buy this market. And therefore, this bull can run further. So trade this bull with us at 13 Market Moves. Sign up today, guys. Let's rock. I'll catch you in the next video soon.